Gautam Adani's story is one of ambition, risk-taking, and remarkable success. Born in 1962 in Ahmedabad, India, Adani's entrepreneurial journey began at a young age. He dropped out of college to pursue his business aspirations. In 1988, he founded the Adani Group as a commodities trading business. This marked the beginning of what would become one of India's largest conglomerates. Adani's early success stemmed from his sharp business acumen and ability to identify opportunities in India's rapidly growing economy. He focused on sectors like exports, imports, and logistics. These were crucial areas for a nation on the cusp of globalization. Adani's calculated risks and strategic partnerships laid the foundation for the group's future expansion. Adani's rise coincided with India's economic liberalization in the early 1990s. The dismantling of the Licence Raj, a system of bureaucratic hurdles, opened up new avenues for private enterprise. Adani seized these opportunities with zeal, quickly establishing his company as a major player in the Indian market. Adani's first major venture was the establishment of Adani Exports, now known as Adani Enterprises. This company focused on the export of agricultural commodities like cotton and yarn. Adani recognized the potential of India's agricultural sector and its ability to cater to global demands. He forged international partnerships, expanding his reach beyond Indian borders. In 1995, Adani took a significant step by venturing into the port sector. He secured a contract to operate Mundra Port in his home state of Gujarat. This marked a turning point for the Adani Group, propelling it into the league of infrastructure giants. Mundra Port, under Adani's leadership, underwent a massive transformation. It became India's largest private sector port, showcasing Adani's ability to execute large-scale infrastructure projects. The success of Mundra Port solidified Adani's reputation as a visionary entrepreneur. He had successfully navigated the complex world of infrastructure development, often marred by bureaucratic delays and political roadblocks. This achievement emboldened Adani to further diversify his business portfolio. He set his sights on new sectors, including power generation and energy. Recognizing the burgeoning energy demands of a rapidly developing India, Adani made significant investments in the power sector. In 2009, Adani Power, a subsidiary of the Adani Group, commissioned its first thermal power plant. This marked the group's entry into the power generation business, a sector crucial for India's economic growth. Adani's foray into power generation coincided with India's growing reliance on coal-fired power plants. The country's vast coal reserves made it a readily available and cost-effective fuel source for power generation. Adani capitalized on this opportunity, rapidly expanding its thermal power capacity and becoming one of India's largest private thermal power producers. However, Adani's focus on coal-fired power plants also drew criticism from environmental activists. The environmental impact of coal-based power generation, particularly its contribution to greenhouse gas emissions, became a subject of intense scrutiny. Despite these concerns, Adani maintained its commitment to coal, arguing that it was the most viable option to meet India's growing energy needs. Not content with dominating the ports and energy sectors, Adani set his sights on further expansion. The group ventured into a diverse range of businesses, including renewable energy, mining, airports, and data centers. This aggressive diversification strategy was driven by Adani's ambition to transform the group into a global conglomerate. Adani's entry into the airport sector was particularly noteworthy. The group secured contracts to operate and develop several airports across India, including Mumbai's Chhatrapati Shivaji Maharaj International Airport, one of the busiest airports in the country. This move signaled Adani's ambition to become a major player in India's aviation sector. Adani's expansion into these new sectors was not without its challenges. The group faced regulatory hurdles, land acquisition issues, and protests from local communities. However, Adani's political connections and ability to navigate India's complex business environment allowed the group to overcome these obstacles and continue its rapid growth trajectory. Section 5. The Adani Controversies, Allegations and Scrutiny. As Adani's business empire grew, so did the controversies surrounding it. The group faced allegations of environmental violations, land grabbing, and crony capitalism. Critics accused Adani of benefiting from his close ties to powerful politicians, particularly Prime Minister Narendra Modi. One of the most contentious projects was the Carmichael coal mine in Australia. Environmental activists fiercely opposed the project, arguing that it would damage the Great Barrier Reef and contribute to climate change. The project became a lightning rod for criticism, with Adani facing international pressure to abandon it. Despite the controversies, Adani remained defiant, defending his business practices and dismissing the allegations as baseless. He argued that his companies operated within the legal framework and that his projects brought economic benefits to the communities where they were located. However, the controversies cast a shadow over Adani's success story, raising questions about the group's corporate governance and social responsibility. Section 6, A Cloud of Suspicion, the Hindenburg Report and its aftermath. In January 2023, the Adani Group was rocked by a scathing report by Hindenburg Research. The report accused the Adani Group of stock manipulation and accounting fraud. Shares of Adani Group companies plummeted, wiping out billions in market value. The report triggered panic selling, with investors rushing to offload their Adani holdings. The Adani Group denied the allegations, calling the report malicious. However, the damage was done. Section 7, the Kenyan connection, Adani's ambitious airport deal. Amidst the Hindenburg storm, the Adani Group found itself embroiled in another controversy, this time in Kenya. In 2023, the Kenyan government announced that it had awarded a tender to the Adani Group to operate and develop Jomo Kenyatta International Airport in Nairobi. The deal, valued at billions of dollars, would give Adani control over Kenya's busiest airport for a period of 30 years. The Kenyan government hailed the deal as a major boost to the country's aviation sector. It argued that Adani's expertise in airport management and its financial muscle would transform JKR into a world-class aviation hub. However, the deal was met with immediate criticism from opposition politicians, trade unions, and civil society groups. Critics questioned the transparency of the tendering process, alleging that it lacked competitive bidding and that Adani had been favored due to its political connections. They also raised concerns about Adani's track record in other countries, citing allegations of environmental violations, labor abuses, and questionable business practices. Section 8, a deal. Mired in controversy, backlash, and legal challenges, the Adani airport deal in Kenya quickly became mired in controversy. Opposition politicians accused the government of selling off a national asset. Trade unions feared job losses and worse working conditions. A Kenyan court issued an injunction halting the deal. The court ruled the tendering process lacked transparency. The Adani Group found itself at the center of a political storm. To Section 9, the stakes are high economic and geopolitical implications. The Adani airport deal in Kenya has significant economic and geopolitical implications. For Kenya, the deal represents a major investment in its aviation sector. The government believes Adani's expertise can transform JKIA into a regional hub. However, the deal also carries risks for Kenya. Critics argue it could lead to the loss of control over a strategic asset. For Adani, the deal is part of its strategy to expand globally. Section 10, the future of Adani navigating challenges and opportunities. The Adani Group, once considered invincible, now faces unprecedented challenges. The Hindenburg report has tarnished its reputation, eroded investor confidence, and triggered investigations by Indian regulators. The Kenyan airport deal has become a political hot potato, highlighting the risks of expanding into politically volatile markets. Despite these setbacks, Gautam Adani remains defiant. He has vowed to clear his name, defend his business empire, and continue his ambitious growth plans. The group has taken steps to address the concerns raised by investors and regulators, including improving corporate governance, increasing transparency, and reducing debt. The future of the Adani Group will depend on its ability to navigate these challenges and restore its credibility. The group's vast assets, established businesses and political connections give it a strong foundation to weather the storm. However, it will need to address the concerns about its corporate governance, environmental record and social impact if it wants to regain the trust of investors and the public. Section 11, Conclusion, a legacy of growth and controversy. The Adani Group's journey is a testament to the entrepreneurial spirit of its founder, Gautam Adani. From humble beginnings, Adani has built one of India's largest conglomerates. However, Adani's rise has not been without controversy. The group has faced allegations of environmental violations and financial irregularities. The Adani Group's legacy will be debated for years to come.